And welcome to Crux Investor. We caught up earlier today with Pip Darvall. He is the MD at Sipa Resources on the ASX. They've got a JV model, a number of projects, 6 projects in total, one in Uganda, the rest in Australia. One project, Thompson North, is a JV with Rio. We talk about the terms they've structured there because that could be a cookie cutter approach for the rest of their projects. If you want our thoughts and opinions on the conversation with Pip and indeed the assets, the company itself and their business model, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities. We've got training courses on there to help you with your diligence process. We've also done summaries of all the interviews that we've done just to save you some time because we know you're busy. And most importantly, you can join a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe and friendly environment, free from judgment, trolling and abuse. So that's at cruxinvestor.com/club. I think you'll really like it. We'd love your feedback too. So do give us a like. We appreciate it. If your thoughts below, get back to every one of you. And if you want to see precisely what we talked about today, do take a look in the description below. Pip, how are you, sir?
I'm great, thanks. How are you?
All good, all good. Where in the world are you?
Okay, so I'm in Perth, sunny Perth. Just after Easter, obviously. It's very nice. I'm looking out the window. Yep. Blue sky, as it is probably 90% of the year here.
Well, I speak to people from Perth most days of the week, actually. And my first interview yesterday, the guy told me what he'd done for Easter weekend, and that was get on his boat and go hunting for crabbies. And then he set himself up a barbecue. So it's slightly different from my Easter here, a bit colder.
Yeah, look, it's a great place if you like the outdoors, Perth. I mean, we moved here from Victoria, which is also a great place, but I'm a lot healthier, actually, than I was then, purely because the climate here is so conducive to being outdoors.
Yes, fantastic. Okay, all rather depressing for me, but there we go. Thanks for joining us, Pip. So we've not spoken before, we've not heard this story, and it's an interesting story. So we're fascinated. So why don't you kick off for people new to you and the story with a 1-minute summary, and I'll pick it up with some questions.
Okay, so Sipa Resources, we are at the very early stage of exploration. That's where we focus. At the moment, our projects are very much all our energy is being focused here into Western Australia, as a result of a lot of the movement restrictions that people have experienced due to COVID, and also because I guess that's where our skill set, really can be applied the best. We know the system well, good contacts here, and the system and the industry networks here are, probably second to none in terms of the exploration side of things. So you're based here, Western Australian projects. We do have a Uganda project at the moment, nickel copper project, but we focus across gold and base metals, probably the big ticket, gold, copper, nickel, zinc. So those most well-known and traded commodities. And as I mentioned, early stage greenfields. And I guess their approach is to identify projects with very strong technical merit. So very geologist heavy over here. So strong geological merit, but ones where we see we can add value to cost effectively. And then, should they turn out to be a partnering opportunity with a larger entity, and we've got a couple of those type joint ventures, or where we can relatively easily progress them under our own steam. So it's a combination of the technical merit plus the ability to progress things within our own means.
Okay, so I just want to be clear. So you talked about being an explorer and also a prospect generator type model with the ability to bring in partners. You feels a little bit all things to all men. So what have you set out to try and be? If you can just sort of clarify that, because you've got 5-6 projects and 12 million market cap. So what's the focus?
Yeah, I wouldn't actually describe us as a prospect generator at all. I think when I talk about joint ventures, I mean, you've got to be a realist in this world where we are in a very high risk industry. And, so the opportunity then at the very early stage, the greenfield stage where we focus is for multiple type returns for making a discovery. Now, what happens after that, should you make a discovery or get enough indication that there's a good mineralised system there, that's when you start going into the more expensive realms of deeper drilling potentially, more expensive forms of drilling. And so you've got to be a realist and work out, well, what's the best way to progress this? So an example of that would be our project at Paterson North. So that was a project that Sipa progressed under its own steam for several years, but now is now joint ventured with Rio Tinto. So, there's multiple reasons for that, but the exploration in that district is expensive. We know there are elephants there in terms of, big mineral systems and big discoveries to be made, but, there's deep cover there also, which makes for a junior explorer it relatively expensive to progress under their own steam. So you can either borrow, if you were more advanced, you could borrow money. You can dilute your shareholders out of existence by, raising more and more funds to progress things. But, the alternative is to, in that case, when you've got reasonable indications of mineralisation, see if you can attract a joint venture partner and, and they fund the work. So in effect, what you get is a free carried interest to a certain point that is funded by someone else, and your shareholders can then have their funds directed towards other areas where there's the opportunity to make a discovery and them to see capital appreciation.
Okay, so JV partner model, got it. So let's look at Paterson North, because Rio, big name, everyone's going to be excited seeing that name there. So tell me, what is the structure of that deal? What are the terms of that deal? How much money they're putting in, over what period of time? What's their optionality on that?
Okay, sure. So I'll give you the deal specifics, but I think there's a couple of very important things about partnering with Rio in this particular case that are important to understand. Number one, Rio is incredibly highly motivated to make a discovery in the district. They've got a deposit they found, Buru, which many people have heard about, and the economics of that will be significantly enhanced. So they haven't really described it as a standalone opportunity. They've made a lot of noise about satellite deposits and so on. So that would tend to suggest that they are highly motivated to make another discovery in the district nearby, which we are very much nearby, to bolster the economics. So that's, one important point. The other important point is they're the guys that made the discovery, right? So who knows best about discovering, copper gold deposits in this particular district? Rio Tinto. So for those two reasons, they make a very good partner in the first place. In terms of the deal, so there's a couple of, it's a kind of a farming deal with a few extra elements in there that we particularly like. One is, so the first step, we've got to spend $6 million to earn 55% interest in the project.
Over what period?
Within 4.5 years.
Okay.
And importantly, prior to withdrawal, they've got to spend, I think it's 3 million and 4,000 metres of drilling. So, they've got to spend X amount to get to 55%, but for whatever reason, should they decide to withdraw, they have to have at least completed 4,000 metres of drilling. And why that's so important in this particular area is the nature of where we're exploring, which is undercover. And the only way to really get a true indication of what's there is actually to drill. So it's very important to us that, worst case scenario, for whatever reason, decide to withdraw at some point, they must have completed that initial amount of drilling, which will give us valuable information, which adds value to the project anyway for either for ourselves to progress or for another, say a mid-tier or another explorer to progress. Because I guess it is one of Rio's huge worldwide portfolio projects, so you've got to be a realist here. Our project would need to stack up against all of those projects that Rio has worldwide.
Okay.
So having that minimum amount of work that they need to complete first is very important. We get, of course, all the data. should they decide to withdraw. And as the operator, we're intimately involved in the whole process.
So as you point out, though, Pip, this is one of multiple projects that they're exploring all over the world, and they've got lots of optionality there, right? So chances of success, who knows? It's not going to be 100%, but it might be 1 out of 2, 1 out of 3, 1 out of 4, whatever that number is. But you're left with, if they do walk for whatever reason, you're still left with data which you can utilize and approach another JV partner, maybe a smaller player for which this project may still be a company maker. Is that how it works?
Correct. And the other thing too is that, even being involved for a certain time period, meanwhile, discoveries are being made all around us, new knowledge is being acquired by others. And so just even being active in a district over, an additional period of time is of value, because there's more things to learn. Other people nearby are spending money, learning new things, publishing that information. New people are interested in the district. And so, the province or the district kind of evolves itself as new parties get involved, new information is unearthed. So as well as the direct information on our ground, we also benefit from new information that others may uncover nearby. So we've been talking about a situation, the worst case scenario, where Rio may say, "Oh, look, okay, thanks very much, guys, but after X period of time, sorry, we're going to say goodbye now." So we've got that data and so on. Okay, fine. But the other scenario is that there's enough indication to keep them going, and so post that $6 million spend, if they continue or they decide to continue, they spend another $6 million, to get another 15% interest. So that would take their interest from 55 up to 70%, and so that's great. And theoretically, they're only spending that because there's been some positive indications, and then beyond that, they have the right to earn an additional 10% interest in the project, which would take them up to 80. By definition of resources with an in-ground value of $1 billion, or completion of what they called an order of magnitude study, which is I guess the equivalent of some kind of a feasibility level study in their Rio terminology. So that's the kind of overall deal structure. There's a few things in there that we like in terms of protecting us should Rio decide to withdraw at a particular point. And then there's a protection at the other end where, rather than being diluted massively out of existence by, which would happen, say they make a discovery, suddenly they go berserk, building an airstrip like they did at Winu, roads, drilling, God knows how many rigs. So you would rapidly be diluted out of existence, or out of a meaningful, ownership position of the project. So I guess the protection we've got at the back end is that they need to define that $1 billion of in-ground value or complete the study, to get to that 80%. So look, we hope it's a win-win type deal, but it's definitely got some protections in there that will be good for Sipa shareholders.
Yeah, and I guess the other component to this, having funded a few of these things in the past, is once they get to that point, I guess the free carry component comes away, but funders will be looking at Rio moving forward, and therefore for you to go and raise your share of the 20% of capital required is an easier conversation to have, or you can offload it, or Rio want to take the option of buying it at some kind of agree rate. That's one thing. But just on the downside thing, like I said, Rio, big company, lots of projects going on, lots of exploration going on. If they kind of get to the point where they've earned 80% of the company, and then they decide to sit there on their hands for 5 years because they're busy or distracted elsewhere, or the market isn't where they want it to be, they've got that option. So what does a company like you do in that instance? Suck it up?
I guess we focus on the other projects we've got. I mean, we've got many other opportunities to add value, and yeah, you're never 100% in control of your own destiny when you're in a partnership of any description. And I guess it comes down to that portfolio approach that we use, every day here, where we try and advance the projects we can under our own steam as far as we can, and within our funding, restrictions.
Again, I'm going to just stick with Paterson North for a while, if you don't mind. I just want people to understand the model, as it were, because it is kind of, I get each deal is different because there's different commodities and different partners there, but they're broadly the same for you in terms of how you hope to move these things forward. So how much money would you have spent on Paterson North before Rio stepped in? What's the investment from you?
Apologies, couldn't tell you off the top of my head. Again, that was before my time. Order of magnitude, something like 5 million Aussie, I'd say.
So $5 million spent. Maybe I need to try and understand the history of the company here. So I know you've been involved for how long?
Since February last year, February 2020.
Right, and so how much company is 12 million market cap today? I keep looking at that. How much money has the company raised while it's been in existence?
Has it since inception?
Yeah.
So Sipa's been around since 1987. Okay. So I would say a lot. I couldn't again tell you off the top of my head.
In its current incarnation, then.
Its current incarnation. Okay. So last year we raised 2.2-ish, September, October, and we've got at our last quarterly we announced 4.1 million in cash. So market cap of 11, so it gives you an enterprise value of roughly 7 million.
Right. Okay. So do you think this kind of business model takes a while to get off the ground, or it takes a while to get the recognition of what it's trying to do?
Yeah, I guess if someone was to look at us, I mean, you've already raised the point that we have a large number of projects. So some people look upon that as a negative, others don't. But okay, so for those who may look at that as a negative or a challenge for us, I think, how can this tiny company manage all these projects? Okay, so I guess the answer to that is we would, okay, so the typical company picture is a company has its lead project, or project A, which gets most of the funding, and project B, which is the backup plan. So our projects, because they're all very early stage, we're still trying to determine which is the lead project. The way I like to look at it is that we've got probably 4 projects in our portfolio that are potential company makers. So, I'm not going to kind of just say, oh, look, we've got too many projects, let's get rid of it. These are terrific opportunities to make discoveries. And I mean, I can take you through the details on each of them, but I guess the key is we're still in that phase of working out which one is the lead project, which one has got the best early indications of mineralisation, which would mean we would divert most of our funds there. At the moment, we're not spending a lot on each project, so we're just kind of moving them forward a little bit, cheaply to work out, okay, which one should we go berserk on, and which one, might we do, a second drill program on, and so on. And so this year is really about trying to work that out. So hence we have a large number of drill programs planned, relatively modest in cost and so on, but also, for example, Murchison, we just finished, 6,500 metres of air core. We've got, multiple thousands of metres planned in different locations, but each of them relatively modest in cost, but enough to kind of go, okay, is this idea going to be a winner or not? What about this target? Is it worth it? Progressing further on. So pretty much all of our projects, we've got targets defined, we've got programs planned, and it's just a matter of finalising the approvals and rolling it out. And next time we speak, I should be able to tell you, I hope, this is a lead project, or, here's project A, here's project B. But right now, I can't tell you that because I think they've all got considerable merit.
So I forgot to ask, with the Paterson North project with Rio, is there any management fee or is there any advanced fee from them on that?
Yeah, there is. So we're the operator, and we get a 15% management or operator fee for doing that.
Does that cover your G&A?
Yes.
Okay. So Paterson North allows you, the management fee allows you to also cover the costs of moving some of the other projects forward in terms of the G&A component.
Sorry, my misunderstanding. It doesn't cover all of that. It's
okay.
It's not huge, but for argument's sake, it makes a big dent in it, shall we say?
Okay. So what are we talking? What sort of number?
So the amount of spend, is ballpark a couple of $1 million this year. So there's instantly $300,000.
Okay, so not insignificant at all, actually. So
for a small company, it's not insignificant.
Right. So let's come back to this model, because what you're hoping to do is do another Paterson North with another partner at some point. But you're going to need to, once you've chosen what that lead project is, you're going to need to, maybe go and raise some more capital. Are you, or do you feel that with the cash in the bank at the moment, you're going to be able to advance it to a point where you can have meaningful conversations, possibly even agreement on whichever the lead project turns out to be?
I think every, small company's dream would be to advance their own projects themselves. But, not all, that's not always going to happen. But for example, say one of our projects up in the Pilbara, it's called Warralong. Okay, so that project, we pegged a shear zone parallel to the shear zone on which de Grey's Hemi discovery is found. So I've worked up in that district a lot when I was the exploration manager for Atlas Iron, and we had a high-grade iron ore deposit on the same shear zone as de Grey's discovery. And there are a number of deposits along that shear zone. The shear zone, 50 k's to the east, also a massive structure, easily visible in government magnetics and the geology, open file geology. Completely open ground, no drilling because it's buried under about 20 metres of sheet wash. So we pegged that. And the great thing about that project, and why I'm talking about it, is that we can advance that relatively cheaply because it's shallow drilling, and it's not like the Paterson. Easy access within 150 k's of Port Hedland, roads and tracks everywhere. It's much more amenable to a junior explorer kind of hip pocket. So, but imagine if we discovered on this parallel shear zone something at least or 10% the scale of what de Grey has discovered. It would be spectacular. And so there are still terrific opportunities out there for us to add value within our own means. And that's the kind of project that you would be able to progress a long way under your own steam. So you asked about funding. So, if we manage to, in our initial drill programs over that area, find some great indications, then of course to go berserk with drilling, we've got enough money at the moment, but depending on what we discover, yes, we might need to raise some more money. At that particular time, if you've made some initial discovery, that's going to be at a much higher share price theoretically. Shareholders don't suffer the same amounts of dilution and so on. So, exploration is about spending money and about ideally spending money in the ground. So do we need to raise money at some point? Undoubtedly. But, the quantum of that, the timing of that, and the share price of that, they're the important things.
You're starting to prioritise things for me already. I know you're talking about edging all projects forward equally, equitably, but you give us a clue there as to, and why that intrigues me is because you're geologist heavy, you told me. Your team is, you're surrounded by them. And I'm just wondering where the market savvy comes from. And if you're saying, well, if we actually think we know what the next obvious target is, and maybe we've got the resource to move that forward, then the market can pay attention to that. That's a slightly different story from saying we've got a lot, multiple optionality here, because people just go, okay, well, I'll come back when you guys have worked made your mind up about where you're going. But it seems like you already have.
Oh, definitely. I mean, look, well, we've got some terrific targets. We've got targets already defined on all of our projects, and the timing of testing those just comes down to, at this point, the approvals process. And, in terms of market savvy, if we're not adding value, for less money than we're putting in the ground, then what are we doing here? So, I guess you have to take a business-like approach to this. And it is, I know in this industry it's hard because one of the big challenges is so degrade. They worked for many years along the Tabba shear zone, and they have defined many ounces of gold along there. But their share price only took off recently because of this one particular discovery. And that discovery is no doubt based off many years of work. So, you're caught in this thing that it could be just around the corner. But, you've got to give yourself lots of chances to make that jump, make that leap, make that discovery. And basically those chances are created by drilling. So that's what we're trying to do. We're trying to either drill or get ready to drill. That's what we're trying to do here.
What have you done before? What were you doing before this? Where have you created shareholder value before?
So prior to Sipa Resources, I was the MD at Jindalee Resources. So Jindalee is a company also listed actually coincidentally in 1987, but well before my time. So I was the MD there for about 2 years. While I was there, I identified, pegged, drilled and created a resource, defined a resource on their lead project, which is the McDermott Lithium project. The share price, sadly since my departure, but I'm very happy about it. Moved from about the 25, 30 cents mark to up, it's nearly $2 now on the back of that project. And really, I guess the thought process behind that project, it wasn't just the geology, it was what is the economics. And, I'm not here to give Jindalee a plug, but the thought process behind it right from the start was, what's the economics here? And the economics basically are the US imports 99.9% of all its lithium, this vital commodity for the new energy revolution. No brainer. So go find some lithium in the US. And we did. And look, it's terrific to see. I mean, they're, a few steps along the pathway now. And so that's the thought process I like to go through. Where's there a gap in the market? That one was a no-brainer. We're kind of looking at it going, here's this thing, we better go and peg it. And so I guess I like to, that's something that I was involved in recently, and I certainly don't take all the credit for that. Jindalee team of, they created the terrific vehicle and for that discovery to sit within, and they've built it, from the state it was when I left, a bit over a year ago. And so, that's one example. Prior to there, I was a consultant, exploration manager to a few groups, and then I was the exploration manager for Atlas Iron for 5 years prior to that, and we discovered a lot of iron ore, our teams. So it's a team game, this kind of thing. So we'd find a lot of iron ore, and as I mentioned, that area along that Tabba shear zone, we had an iron ore deposit there, Mount Dove, very high grade, quite unique, sitting out in the middle of nowhere. And that shear zone has been a conduit for fluids to create multiple deposits all along its length, and we're hoping to find the parallel one and show that the parallel shear zone has the same endowment.
So what's the end game for you here? Because you've got another JV, slightly unusual JV with Buru Energy, which I want to talk about in a second here. But is the idea get one or two of these in the back pocket? Hopefully that moves the dial in terms of share price, market cap, all of those good things, liquidity, and you can raise some cheaper money. Is the idea for you guys to actually do the exploration, to do the development of these projects? I haven't heard about any mine builders on the team yet, but is that the game plan, that you want to actually take some of these projects forward yourself?
Look, we're in a very risky game here, and I mean, the ways you lay off risk are via joint ventures, via innovative deals, via portfolio management, and by sticking to your knitting. We are not mine developers. We are exploration geologists here, and that's what we know how to do. We are not under any illusion that we have the skill sets to develop a mine. Now, should we discover one, terrific. You've seen terrific transformations of companies from discoverers to miners. So Northern Star, okay, there's a great example. They discovered some things, and really then they worked out where their strengths were and did deal after deal and played to their strengths, and now are, monstrous. So, play to your strengths, stick to your knitting. That's really, I think, what our approach is.
I like that. But it comes back to what I started talking about, which is then you've got to be really good at structuring JV agreements and deals, and what those things look like in terms of what you get out of it. Free carry is great, management fees great, how that money flows through. Well, yeah, you got to discover it too. And there's a lot of people go through their lives and they don't discover anything. So yeah, no, I admire that skill set, and I like stick to your knitting. So let's talk about the Buru energy deal and how that's constructed, because it is. Yeah, slightly unusual.
Yeah, so I guess what we're trying to do there is combine two companies' skill sets. Now, the minerals world and the petroleum world aren't traditionally seen as compatible, but it's an interesting scenario when you think about the fact that we may both have, over the same geographic area, overlapping tenure, and exploring, working in the same place, just looking for completely different things, but using pretty much the same methodology. We talk about a mineral system type approach where we look for, like a source, a pathway, and then a trap. So, a source of copper, zinc, lead, whatever it is, some way for it to kind of percolate through, and some trap where it's going to get stuck. That's exactly how, this is very basic way of describing it, of course, but that's how the oil guys think. What's the source? Where's the kerogen? Where's the porous, pathway for the hydrocarbons to flow through? And then where's a trap, like an antiform or something, where it goes upwards, gets stuck. So we kind of think about these things in similar manners. So we bring this kind of similar approach. Now, what they've got is years of working in the district and extensive, seismic processing capability. And what we've got is the minerals world, our expertise and capability in being able to explore for minerals. So we're looking for a style of deposit that is well known, where it outcrops and has been mined on a place called the Leonard Shelf. So there's some well-known lead zinc deposits there: Kajabat, Nalala, Palara, Wagon Pass. So these are well-known, and they were highly sought-after concentrates, good metallurgical properties. So we're basically looking for the same style of deposit on the opposite side of the basin, so that in this case the southwest side of the basin, in basically the identical geological position. And the reason that they haven't been discovered there before is, again, it's under some cover out in the middle of nowhere. But we believe that the combination of our expertise plus, the seismic processing capability and the analysis of the overall basin that Buru have undertaken previously through their petroleum exploration work will give us the best chance of making a discovery.
Okay, so talk to me about numbers. I mean, what's the financial relationship obligation?
Sure. So it's a 50-50 joint venture with the first $250,000 to be spent by Buru. And, we have a nominal goal within the JV to drill half a dozen drill holes or wells for the petroleum guys out there. Actually, just as an aside, it's quite interesting having a conversation where you suddenly realise that you're using completely different words for the same thing, or the word you're using, you suddenly realise, actually, no, that's not right. So it actually stretches your brain a bit and makes you think about things differently, which is a good thing in my book. So, but we've got this nominal kind of goal of six drill holes, 6 wells, into the target horizon, and that will hopefully either make us a discovery or give us some very strong vectors towards one.
Okay, it's interesting. But what's your hope? What's the outcome of the phase 1 of this project once $250,000 has been spent and holes, wells have happened? What do you need to be able to make the decision to move forward with that JV? I guess is what I'm asking.
We would need a good mineralised intercept, or some very, very strong indications that there is a mineralised intercept not far away. So, for argument's sake, in different types of exploration, you can use techniques to determine if within a reasonable radius there could be some sulfides just off hole that you might have missed. So, downhole EM, for argument's sake. So, say we drill a hole, we either get a monster intercept or we don't. Then you would test to see if there could be a monster intercept to be had nearby, an off-hole conductor in downhole EM terms, and try again. So, and it's an iterative process. You have a look, make an assessment. Do you keep going or not? And so every time there's like a decision point. You get here, it's like a decision tree. We spend X. We get to this point, we go, okay, it's go, no go. And that's, you've got to be pretty ruthless at that point, because there's plenty of situations where, you can just keep pouring money.
Yeah, get it. So I think the nature of your business model is it's high risk, high reward. So what people like me, investors need to believe is that these JV partnerships that, 1 out of 2, 1 out of 3, 1 out of 4 will go the full length, because any one of those is a company maker for you if it kind of reaches its end conclusion. If you're carried to the point of whatever investment decision is being made by your business partner. But the reality is that a lot of those things will fall away. So you need to be really good at, 1, discovering those assets, and 2, getting the right deal on the table for people to start appreciating the potential here. So how many more of these JVs do you think you're going to need to do in the next couple of 12 months to start getting noticed? Because at 12 million market cap, you're going to tell me you're undervalued given the potential on the table here. So how quickly can you move one or more of these projects forward to kind of get that recognition that you want?
Well, I definitely think the company's undervalued. I've been buying shares on market myself, as have other directors. So there's it's all in the public domain. But in terms of how many JVs do you need to be a success, I don't know the answer to that. I don't think there is an answer. I think what you need to do is have good targets with good technical merit and test them. Is it there? Nobody knows. But we're not going to, not going to die wondering, that's for sure. And so our goal is to test targets that have a very strong technical merit as cheaply as possible and see what happens.
Okay. You've got confidence. Where's the confidence come for the market? What should they be looking to and go, that is what good looks like with our business model?
Proof's in the pudding. I can't tell you that we're a better company than company B to put your money into Sipa rather than company B. I can't tell you that. I am. Other directors are. We think we're undervalued, but there's no point in me telling you that because it's are we going to make a discovery or not? I believe we're set up for success. I think we're set up for success for the following reasons. We've got overheads have been slashed. We're spending all the money on exploration. We're well funded, and we've got a whole we've got a whole pile of great targets to test across a couple of commodities, and we're testing them.
Brilliant. Pep, appreciate you coming in, telling us the story. I quite like these models. I think that there's a bit of excitement. There's always room for it in people's portfolio, the high leverage components. So stay in touch. Let us know how you get on, especially with some of these, when your partners actually start spending some of this money heavily. I'm delighted to take your phone call. I'll speak soon.
Great. Thanks very much.